2025 is ending as one of Nigeria's most pivotal economic years in a decade. This had been driven largely by fiscal reforms and a push to reduce dependence on oil revenue. New data from the National Bureau of Statistics shows company income tax collection has risen sharply to 4.76 trillion naira in the first half of the year, powered by strong performances in finance, manufacturing and mining. Government officials say the rise reflects the early impact of tax and revenue reforms. But the higher revenues came alongside tight financing conditions. The CBN's Monetary Policy Committee kept the benchmark interest rate at 27% for most of the year to curb inflation and protect the naira. Meanwhile, manufacturers and SMEs argued that the high rates slowed production, delayed expansion plans, and dampened job growth, highlighting the delicate balance between stabilization and enterprise survival.
When we are in school as economists, they say when there's too much money, you increase interest rates. And that's what they've been doing.
Nigeria also expanded its global footprint in 2025. The country's assumption of the G24 chairmanship positioned it at the center of discussions on debt sustainability, capital flows, and reforms to global financial architecture, a move diplomats say strengthened Nigeria's voice in international economic negotiations. Reform in the power sector delivered some of 2025's biggest wins. The Electricity Act 2023 attracted over $2 billion in new investments as Lagos and Enugu and other states advanced their subnational electricity markets. Nigeria's deeper integration with the West African power pool further boosted regional energy trade. In the oil and gas sector, investor confidence returned strongly. Shell gave early approval for the $10 billion Bonga Southwest Deepwater project, 3 years ahead of initial timelines. With a projected output of 150,000 barrels per day, the project is expected to support government's target of raising national production by 1 million barrels. And with the launch of the 50 oil block auction on December the 1st, more investment could be heading for Nigeria from IOCs, that's international oil companies, to NOCs or national oil companies.
But from what we have seen of what Shell is trying to do, the decision will rev up production, and it is believed that over a number of years, the Bonga asset, will be able to together produce up to 150,000 barrels of oil on a daily basis.
The auction is actually according to the PIA, and the PIA actually states how each of these blocks are supposed to be auctioned, and then the rules, regulations that are actually guiding this. Houston has
The Dangote refinery remained a game changer throughout 2025. Its operations slashed fuel import dependence by more than a half and saved billions in foreign exchange. Analysts say the planned ramp up to 1.4 million barrels per day could establish Nigeria as West Africa's leading refining hub.
We're aiming to over 2 million barrels per day, and it's achievable. Don't forget, Nigeria was at one point doing 2.4 million barrels. So it's not rocket science. It can be delivered once we resolve the asymmetries, because some of these asymmetries is on what's going on in the Niger Delta area, the proliferation of the artisanal refineries and bunkers. So all of those will settle if we deal with the main issues.
Beyond energy, 2025 saw renewed momentum across technology, agriculture, manufacturing, and financial services. Improved FX liquidity and clearer policy direction helped startups return to fundraising and manufacturers revive stalled expansion projects, and banks cautiously resumed long-term lending.
Past sort of 6 to 9 months, there's been a stabilization of the naira. And that goes to show that things are finally working. There are sufficient forex reserves, and we think that the central bank is doing a lot of good work to ensure that continues to be the case.
It goes up, it makes goods more expensive, but now we have noticed some stability, which we hope is going to get better and is going to stay more stable, at least for us to be able to plan and to be able to budget. It's still expensive though. We would have preferred something near the 1,000 naira mark.
Still, the year was not without challenges. Inflation, though moderating, continued to strain households. Oil theft, insecurity, and uneven foreign investment inflows limited gains. Economists say that while reforms laid a stronger foundation, sustained discipline and structural changes will determine how much Nigeria can consolidate in 2026.
We don't have a credit-driven economy in Nigeria. Nigeria is purely payment-driven, rent-seeking economy. So it's difficult for you to also think that once we make this policy, one jacket fits it all, then it's going to have a immediate response on us. I don't think that's the approach to take. I think the approach to take is supply side. So the take home here is that how do we improve supply? How do we improve manufacturing?
2025 is winding down and Nigeria's economic outlook remains cautiously optimistic. The gains recorded this year from revived investments to improved revenue mobilization signal a possible turning point if reforms stay on course. In Lagos for News Central, Nasir Agbalaya.